Hey everybody, it's Larry Berman here, coming to you live from wonderful Queenstown, New Zealand. Seeing the backdrop here, this place is absolutely spectacular. Been down in Australia and New Zealand the last week and a half. Basically a vacation. I'm not doing any investment research at all, though, with the time zone difference, still keeping at least one eye on the markets. And a couple interesting things this week. And as we get into the FOMC next week and what they're likely to do with the summary of economic projections and the dot plot, the markets are moving all over the place and a lot of speculation. Anyways, I'm about to go parasailing today, or paragliding, I guess you could call it. Yesterday I was bungee jumping. It's really a big adrenaline rush if you're vacationing in an adventurous way down here. But love it, love the people. It's been fantastic. Let's dig into the chart room and see what we learned this week. So it's all about energy. Looking at this chart of XLE, said for a couple of years now, since the post Russia-Ukraine war spike, where XLE got into the mid 90s, you can see it back here on the charts. I don't see a lot of value in this. So when you look at a pattern like this, that if you're looking purely technical, okay, you forget the fundamentals, you're looking purely technical, you see this incredible rally up here, you see this pattern, and we call this basically an ascending triangle where you've got higher lows and flat highs. Very, very bullish pattern. And the theory is that you take the size of this base, if it breaks out, and attach it on up here, and you get these, price targets for the energy sector up into here. So I don't think fundamentally this is supported. However, it means it doesn't mean it can't happen. We've seen markets get irrational in many areas as money comes out of big tech. And I think the overvalued part of big tech and looks for where value is. This sector might still be the beneficiary of it. When we look at the crude oil chart again, go back and look at the spike in crude oil above 100. I don't think the world works well with oil above 100. Now, what is all this going to mean if we get back up there for the Fed policy, for inflation? Listen, they're very, very worried about this. They panicked last year and they pivoted, and they did not get the economic slowing that they were expecting. And so as they get into the meeting next week, they're going to be talking about, well, what if we go too soon? And so I expect they're going to notch down the rate cut expectations from 3 to 2. So we'll see how that plays out in the summary of economic projections. If they do that, the markets are not going to like it at all. And so that is probably the risk. So when we look at that, and we look at the NASDAQ here, we kind of see a little distribution happening. Now, tops are impossible relative to bottoms. Bottoms, you get the volume spike, you get the capitulation, you get test of support. Tops are rolling. These things are rolling. And so while we've seen dramatic reversal patterns in NVIDIA, last week we talked about, and broadening out into some other tech names. Got Microsoft doing a little bit of that now, and some of the other names like Apple. The leadership is changing, and so again, where's that money going to go when that bubble-like or high valuation peaks, and it goes into areas where there's a little bit better value. So we think that's gonna come into the names there. And finally, just have a look. So AIQ, this is the artificial intelligence ETF. We've showed it, talked about it before. Again, seeing that rotating pattern there tells you a lot about, again, the value relative to the more speculative growth trade. Again, love it long term, but don't see a lot of value here. You want to buy on pullbacks to trends, definitely. Although Bob Farrell said, if everyone's waiting to buy that pullback to trend and you actually get it, it's probably not a dip you want to buy. And finally, looking at the bond market here, struggling, failed rallies last couple months. Quarterly refunding announcement is still 6 weeks away, but the colossal amount of supply that needs to be digested. So that takes us to the Fed meeting again this week and their discussions on quantitative tightening, and are they going to slow the pace of that? And based on the people that we follow that really understand what's going on in the nuances of the market, they're probably not going to change the QT pace because they want to keep it tighter. They do want to engineer this soft landing the market's been ramped up on. But again, I think it's going to be very, very hard for them to negotiate that kind of outcome. Anyways, that's it for this week. I'm off to paragliding right now. I'll try to post some pictures on social media for those who follow these things. It's been an incredible trip. Anyways, have a great week, everybody. I will not be on BNN this week again. We'll be back in the studios on the 25th, assuming my flights all get me home in time.